Good morning, everyone, and thank you for joining us today. My name's Kay, and I'm Head of Healthcare at Duncan and Topless. We're very pleased to have Will Ellis with us this morning. Will is co-founder and managing director of BW Healthcare Surveyors and has provided help and advice to many GP practices, including a lot of our clients during his 15 years plus in this highly niche primary care sector. BW Healthcare Surveyors specialist primary care team provide many property related services, including property health checks, notional rent reviews, lease rent reviews and renewals, market valuations, and sale and lease back, to name but a few. The feedback from our clients who have used them has been excellent, and so we thought it would be great to have Will come along today and talk about some very topical issues impacting GP practices in respect of their properties. If anyone does have any questions, please do type them up in the chat screen and we will pick them up as we go through at appropriate points. If you think of anything after the presentation, then please do feel free to email Will or myself. We will provide our email addresses in the chat screen for you. So a very warm welcome, and I'll pass over to Will.
Thank you very much. Thank you for that, Kay. So yes, right, let me try and see if we can share my screen and then we can get started. Just one moment. So hopefully that has come up okay for everybody.
It has, thanks, Will.
Fantastic. Right, okay then. So what we're going to be talking about today. So I'll briefly run through who we are as BW Healthcare Surveyors, but I'll keep that very brief because Kay, you've just done a fantastic introduction into us and the company, so we probably don't need to dwell on that too much. And then we'll just get into the to the presentation itself. So I'm going to talk a little bit about the premises cost directions. So the premises cost directions that came out last year, they've been live now for 12 months. So I'm sure a lot of you are aware of some of the changes that have been made, but I'll just talk about how we've seen how the changes have affected practices and affected our clients with various things. So we'll run through a couple of the key changes in the premises cost directions, and then we'll talk about notional rent and what it is, how you can kind of ensure that you're maximising the notional rent and things. So we'll run through notional rent for a little bit. So that's mainly for the owner occupied practices, and then for those in leasehold surgeries. We'll talk about GP surgery leases, some of the health warnings when you're putting a lease in place or when you're renewing your lease, or just to check within your existing lease, things to check out, look out for in your existing lease. Then we'll have a couple of quick slides, one about how to maximise your rental income. So again, that's more specifically around owner-occupied practices. And then we'll talk a little bit about our free premises health checks. So some of the free assistance we can offer you as practices with various different matters. Okay, so very briefly, like I said, Kay's done a fantastic introduction already, but my name's Will Ellis, Managing Director here at BW Healthcare Surveyors. So we help various practices up and down the country with various premises related matters, from notional rent reviews to putting leases in place and sale and lease back and things like that. We've already helped around 1,500 practices nationwide since we were set up about 8 years ago. 2017 we launched, and we are #1 ranked specialist primary care firm according to Practice Index, with over 150 5-star reviews. And we've got 8 specialist primary care surveyors here as well. So we've got 8 surveyors dotted around the country, all specialist in primary care. It's literally all we do. We don't delve into any other sectors, just purely primary care. Okay, so that's a little bit about the company. So just to kind of, I guess, show that we know what we're talking about. We've obviously acted for an awful lot of clients. We see all these issues on a daily basis. So one of the things that we see a lot and we get asked a lot about is the changes in the premises cost directions. There's loads of information online about some of the changes and things. So I'm not going to go into too many details about all the changes. We've got blogs on our website, but they're all over. Most primary care surveyors, accountants, solicitors have got some information about the changes in the premises cost directions. But some of the key changes that we've seen is the changes in the lease rent review process. So I think it's worth highlighting how that is affecting practices, because for those of you who are in leasehold premises, so those who have landlords and don't own the practice yourselves, you'll probably normally what will happen when you have a rent review is the landlord will instigate that, and then they'll just negotiate directly with the district valuer and the ICB, and you don't really get too involved. You should have protections in the lease to say that the lease rent can't go above what your what you're being charged. But with the changes in the premises cost directions, they're a little bit ambiguous now, and they actually suggest that the landlords can no longer negotiate directly with the district valuer, and you as tenants will actually have to instruct your own surveyor to negotiate directly with the landlords to agree a provisional rent. And you don't necessarily have to instruct a surveyor. You just have to show some sort of negotiation with that. And there's a pro forma now that the NHS will send you as part of that process to outline how you have negotiated a reduction in rent or agreed the rent that the landlord has proposed, and that's prior to the ICB instructed a district valuer. So it's just to be aware of that, really, that you may have to be a little bit more involved in that process than you perhaps were previously. But from our point of view, if it comes about that you have a rent review, we're more than happy to assist you through that process and advise on what the best next steps are and how we can assist you with that process if required. I personally don't think you should have to instruct a surveyor. But every ICB is interpreting these directions slightly differently. Some areas are happy for you to just pass it on to the landlord. Others are insisting you instruct your own representation surveyors to assist you through that process. But when you have a rent review, if the ICB are insisting on external assistance, then we're more than happy to assist you through that process. And if you're not sure, then just pick up the phone and we can talk about that. Okay, so that's affecting kind of leasehold premises. Something that's going to affect you if you're in an owner-occupied practice is the 12-week deadline to challenge and accept rent assessments. So previously, if you had a notional rent assessment, you'd have 3 years to challenge the review as long as you don't accept it or decline it. There's now this 12-week deadline that's been inserted into premises cost directions, which, again, as always, is a little bit ambiguous, and it's been interpreted slightly differently up and down the country. But some ICBs are suggesting that you now only have 12 weeks to kind of instigate an appeal. We don't think that's the case, and we haven't actually seen that in theory or in practice, I should say, since the premises cost directions changed 12 months ago. We've instigated a number of appeals outside that 12-week deadline, so I think it should be absolutely fine. I think the 12-week deadline really is suggesting that if you have a rent review, a notional rent review, and you get an increase in your rent and you don't accept it, the ICB aren't going to pay you that increase until you formally accept it. So I think that's what the 12-week deadline is there for, is you've got that 12 weeks to formally accept it. Otherwise, they potentially won't pay you that increase. So it's always worthwhile trying to stick to their deadlines. But I would say prior to accepting or declining anything that you receive from a notional rent perspective from the ICB, just pass it on to a surveyor, surveying firms like ourselves. But there's a number of others. Just get somebody to check it for you to make sure what is being proposed is correct and in line with the current market. There's also the cap on the improvement grant funding has now been removed. So anybody who received improvement grants 2, 3, 4 years ago will know that the maximum was around 66%, or the standard was 66%. So if you were building an extension for £100,000, you could only get 66% of funding or grant money from the ICB, and you'd have to fund the rest yourselves. You'd have to find that 34% yourselves. That cap has now been removed, and the ICB now have the capability, and that's what I would say, it's just a capability to offer 100% grants. It doesn't mean necessarily they're going to offer 100% grants. There's still major financial issues with most ICBs and funding issues, and a lot of them are looking at saving money. So although they have the capability of offering 100% grants, in reality, I don't think there's many of those being branded around, and you're still looking at probably 66% or 50% grants. But look, they've got the capability of doing it, which is certainly good news. And another thing with regards to grant money and improvements is practices are now required to complete what we call PIDs, so a project initiation document, which is basically a business case. So if you wanted to build an extension, you'd now have to put a business case into the ICB to advise what you're going to be using that extension for, why you need it, how it's going to benefit the patients, what the costs of it are going to be to yourselves as a practice, but also to the ICB. So it's a full-on business case. It can be quite a lengthy process. PIDs were quite often required anyway. Most ICBs required them in order to provide approvals for extensions, but they are now a formal requirement, and every single development proposal will require a PID to be submitted to the ICB. And then there's new abatement periods as well. So again, with regards grant money, if you use grant money to build an extension, then technically your notional rent will be abated, so it will be slightly reduced for a period of time, and those periods have slightly changed, and the maximum period is now 18 years rather than 15 years. But I would say, it's worth, if you're going to be applying for grant money and you're going to be looking at potentially getting abated, probably just seeking that information out. Like I said, there's plenty of information online, or if you need that information after this, if you're considering a potential improvement grant now, then let us know, and I can send you through what the different the new abatement periods are for the latest directions. Okay, so that's a brief overview of some of the premises cost direction changes affecting you. Oh, the last one, in fact. So leases are required now if all partners have retired. Again, this is something that should have been in place anyway, but it is now a requirement according to the premises cost directions that if all partners have now retired and therefore there's no owner occupiers of the premises, then you need to put a lease in place. Our advice, to be honest with you, is always, even if just one partner has retired and there's one partner that is no longer the tenant and the landlord, you should really be formalizing that agreement in some way. Not always a lease is required. Sometimes you can just change your partnership agreement to state what the changes are. But if there's a partner that has left and they're no longer occupiers of the premises and some improvement works need to be done, so there's some dilapidations of some sort, if you don't have a lease in place or you haven't stipulated it within the partnership agreement who's responsible for what, it can cause issues, because the retired partner perhaps would want the tenants to be responsible, because then it's not going to cost them any money. The tenants perhaps want everybody to be responsible, so then it's fair. But without a lease or a partnership agreement in place, then it can cause disputes. So our advice is just to formalize that, even if one partner has left, but certainly if all partners have left, and a lease will definitely be required. Okay, so that's the kind of premises cost directions overview. Just wanted to talk very, very briefly as well about notional rent, because we did some research towards the end of last year to have a look at the practices that we visit, and it turned out around 89% of practices that we go out to visit are underfunded for their notional rent, which was a staggering number, to be honest with you. It was more than we were expecting when we started doing the research. I mean, it is obviously only based on the surgeries that we've inspected. It might not be the case for the other practices in the UK, but I'd be surprised if it isn't. We do around 400 a year, and of those 400, around 89% were underfunded. So I would say it's more important than ever to have your notional rent checked by somebody independent to make sure that that is correct and in line with the current market, because there's a very good chance it isn't if you don't already do that. And in terms of the notional rent process, there's huge delays with notional rent processes at the moment, with staff shortages within the ICB and within the district valuer's office. So quite often the rent reviews are outdated, as I'm sure a lot of you who are going through the rent reviews now will be aware of. But there's just a few things that might help you speed the process up. So one of the ways is to regularly chase the ICB and the NHS. Just keep on their toes. But just for whatever reason, those practices who hassle them the most get dealt with the quickest. It doesn't seem fair, but that is just the way it is. It never seems to go in order of when the rent review is due. So I think just keeping in touch with the ICB and keep regularly chasing them will help speed up the process. You can also request your previous CMR1 forms. So the first stage of the notional rent process is where the ICB will issue and send you the CMR1 forms for completion. You can actually preempt that process by, if you've got a copy of your previous CMR1 forms, you can just update them, amend them, and send them off. And then you're dealing with that process yourself, saving the ICB a bit of time. It saves them having to mess around, sending you blank forms and completing them and things. So you can save them time as well. So if you've got copies of your previously submitted forms, then just simply update them and amend them. And if you don't have copies, when the ICB finally send you the CMR1 forms, for whatever reason, they always just send you blank forms. So they'll just send you a blank form for you to fill in from scratch. But again, if you filled them in 3 years ago and not much has changed at the surgery, just ask them for a copy of the previously submitted forms. They should hold them on file. So if you don't have them on file, the ICB certainly should. So just ask them to send them through to you, and they should be able to, then you can just update and amend them rather than having to spend time filling them in from scratch. And when you finally receive the notional rent assessment, the district valuer's report, it's just make sure you get a second opinion. And I'm not just saying that because we're a company that offers that second opinion. Even if you don't use ourselves and use another surveying firm, I would just say it's so important to get a second opinion to make sure what the district valuer has proposed is correct, to make sure it's in line with the current market, make sure that they've made no mistakes in the measuring up or in the counting of car parking spaces. Just get a second opinion. And most companies like ourselves offer free initial assessments anyway, so it wouldn't even cost you anything to get that assessment done. And we work on a performance related basis as well, similar to most surveyors in the sector. So again, you're only paying us if we achieve an increase. So I would say it's very, very important to get a second opinion, especially when you bear in mind 89% of practices are potentially getting underfunded for the notional rent. And just be aware of the notional rent abatements. So when you receive grant money, as we were talking about with the changes in the premises cost directions for grants and things like that, and the changes to the abatement periods, it's worthwhile just checking what your abatement calculations are. It is a very, very straightforward calculation, the abatement, but it is surprising how many times the ICB and the district valuers make mistakes on there. So again, it's just worthwhile getting somebody to check what those abatement calculations are and make sure you're actually being abated correctly and for the correct period of time. And then the final thing is just to make sure that you seek approval for any improvements and upgrades that you make to the surgery. So you're required to do that anyway through a premises, through the PID. So the project initiation document, so you can seek approval to build the extension. What a lot of practices make the mistake of is think that assumes that the NHS are also agreeing to reimburse them for that extension, and that's not always the case. You need two separate approvals, one for the actual building of the extension and the approval of that additional space, and then one for reimbursement as well. So just very, very important that you get prior approval, because it can be very, very difficult to get retrospective approval for improvements. In fact, the premises cost directions suggest that you shouldn't be able to do that. So it can be very, very difficult. If you built an extension and you don't have approval for reimbursement, you may find that you're never going to get approval. So very, very important that you get that prior approval as well. Okay, so that was kind of concentrating mainly on owner-occupied practices, something for those in leasehold premises as well. So when you're putting a lease in place, if you have an existing lease, or you're putting a new lease in place, there's a few things that you probably might need to be made aware of that maybe you haven't thought about before. So certainly for new leases, when you're putting a new lease in place, perhaps you've got partners that have retired. Or perhaps all your partners are retired, and as the premises cost directions say, it stipulates to put a lease in place. A lot of practices don't know where to go. We've seen practices just go and get leases off the internet, just standard commercial leases, which is very, very cheap to do, but it causes a huge amount of issues further down the line, because unlike most commercial sectors, or pretty much all commercial sectors, the primary care is very, very niche, is very, very specific, because it's not just the landlord and tenant that need to be documented within that lease. You've got third party with the NHS and the ICBs, and the ICBs and the NHS are going to play quite a vital role in things like the rent reviews and the lease renewals. So just very, very important that you get a specific GP surgery lease when you're putting a new lease in place. Extremely important that lease is approved by the NHS. I've had a client this morning who's had a rent review from the landlord. The landlord's increased their rent by 20%, which is a ludicrous increase, really. And they want us to assist them through that process, but that lease hasn't been approved by the NHS. They've gone to the NHS, and the NHS have said, well, we don't have a lease. We didn't even know you were in a leasehold premises. It's not been approved. And we've had a look at that lease, and that lease doesn't have the correct protections in there. It doesn't stipulate what the rent review mechanism should be. So it's going to make life very, very difficult for us to assist that client with that rent review, and certainly try and negotiate with the landlord and then try and negotiate with the ICB. So it causes huge issues at rent reviews when that lease hasn't been approved. So very, very vital that when you're putting a new lease in place, you get approval from the NHS and the ICB. And if you're in a leasehold premises and your lease hasn't been approved, then I would be speaking to the ICB pretty quickly to see if you can go through the process of getting that approved. And one of the things that the ICB will check when they approve that, and one of the things that representations like ourselves will have a look for you is to ensure you have the necessary protections in the lease. So when you have a rent review, you should have a clause in the lease that says the rent cannot exceed what you're getting reimbursed. And this is the issue with the client we spoke to this morning, is they don't have that protection in their lease. So at the moment they could end up paying the landlord that 20% increase and only getting a 5% increase from the NHS. So they're left with that, with what is around £10,000-15,000 shortfall in rent to the landlord, because they don't have the necessary protections. So very, very important you have a clause in there that says, like I said, the rent cannot exceed what you're getting reimbursed. And then it doesn't really matter what the landlord proposes and what you're paying the landlord, because that's going to get reimbursed. That's all that matters, whether that's £10,000 a year or £200,000 a year. As long as you're getting that reimbursed, then that's the main thing, and that's what that protection clause in there will ensure you have. And you should also have protection at the end of the lease. So if you're protected under the Landlord and Tenants Act, when the lease expires, you should be able to just renew that lease, ideally. Okay, and then something else worth checking is your obligations. Check your repair and maintenance obligations. So if you're in a leasehold premises and you've got a lease in place, you'll either be responsible for just the internal repair and maintenance, or you'll be responsible for the full building, the internal and the external. Now, if you take on the external responsibilities, then you should be able to retain a proportion of the rents that you receive from the NHS. So let's say your rent to the landlord is £100,000. What would normally happen is you receive £100,000 from the NHS and you pay that in full to the landlord. Now, if you're responsible for the external repair and maintenance, you can actually retain around 5 to 7.5% of that rent. And the idea is you use that retention to pay for any repairs and maintenance that's needed for the external part of the building, because the external part of the building should be the landlord's responsibility. So the landlord either has to be responsible for it, or they have to give you some financial reward for you being responsible for it effectively. So that's what that retention is there for. So if you're in a leasehold premises and you're responsible for the external repair and maintenance of the premises, then it might be worthwhile just checking to make sure you are retaining the necessary rent, because there's so many practices that aren't. We speak to practices all the time when we've checked their obligations that they're not retaining any rent, and that can't be backdated. So if you haven't been retaining rent and you're 20 years into a 25-year lease, there's nothing you can do about it. You can do it moving forward, but you can't go back, or it can certainly be very difficult to go back because the landlord would have to agree to that. So very, very important, if you're not retaining rent, that you get that sorted out sooner rather than later. And then if you're in a leasehold premises as well, it might be worthwhile considering a lease re-gear prior to an expiry of lease. So the lease re-gear, for those who aren't aware, is basically just a renewal. It's just terminology for renewing the lease early. So if you're in a 25-year lease and you've got 5 years left to run, but you want to renew the lease, then it's called a re-gear rather than a renewal, because effectively you're scrapping the initial lease, the existing lease, and creating a new one. Now, the benefit of a lease re-gear is, one, it's good for sustainability of the practice. It keeps the practice secure for another number of years. But also, quite often, what you can do, depending on who your landlords are, is you can negotiate with the landlord to perhaps give you some money for extensions or upgrades. So if you've got 5 years left to run, you could approach the landlord to say, look, you're running out of space or you need some upgrades. If they were to fund those, you would be happy to sign up for another 25-year lease. And it benefits the landlord because it gives them that security of you being there for another 25 years. It also significantly increases the value of that premises. So when it comes to GP surgeries, value is closely linked to rental income as one factor. So the more rental income for that premises, the higher the value. And then the other factor is the longer the lease. So if you've got two identical practices receiving exactly the same rent, but one's on a 5-year lease and one's got a 25-year lease, the one with a 25-year lease is potentially going to be worth significantly more than that one with a 5-year lease, which is why landlords are so willing to pay X amount of money, sometimes hundreds of thousands of pounds, to build you extensions or upgrade the surgery prior to you agreeing to renew the lease. They're not obligated to do that, just to be clear. They don't have to if they don't want to, but it is just something worth bearing in mind. If you're approaching the end of your lease and you need some upgrades and improvements, which pretty sure every practice in the UK does, then it might be just worth considering perhaps just making an approach to the landlord to see if they would be interested in doing that. And then you've got to check your service charges. So again, this is probably very, very specific to leasehold premises, but very, very specific to practices who lease from NHS Property Services or CHP. If you pay service charges to them, you're probably already in dispute, because everybody seems to be in dispute with NHS Property Services regards service charges. But it might just be worthwhile checking to make sure what you're paying them or what they're trying to charge you is correct and in line with the current market, and to make sure that they're not overcharging you for things that they're the services they're providing, or actually make sure they're not charging you for services that you're not even getting, which we've seen on a number of occasions. We've seen practices being charged for gardeners when they don't have a garden, or lift maintenance when they don't have lifts. So again, just worth checking your service charge schedules to make sure there's been no glaring mistakes there. Okay, so that's it from a leasehold premises and leases. Just very, very quickly, how to maximize the value of your premises, because I think it's very, very important in this day and age that everyone makes the most of the value of their premises. And as I've alluded to already, the value of any GP practice is closely aligned to the rental income. So if you're in an owner-occupied practice, it's going to be the higher the rent, the higher the value of the premises, 9 times out of 10. So the best way to increase the value of the premises is to increase your rental income. And one of the best ways to increase your rental income is to have make sure your notional rent is correct and in line with the current market. Make sure you're not one of those 8 to 9% of practices that are potentially getting underfunded, and look at challenging and really maximising the rent. If you can increase the rental income for your surgery by as little as £1,000 a year, it could increase the value of the premises by £10,000 or even £15,000. So it can make a huge effect on the capital value of the premises. And then other things to think about is if you rent out space in the premises to district nurses or a pharmacist or a phlebotomist, whatever it may be. If you're renting out space to them, make sure, one, that you've got an active lease in place. So make sure that that's a secure tenancy. And then also make sure that the rent is, again, in line with the current market. Make sure there's no outstanding rent reviews that could be instigated. And if there are, look at instigating those rent reviews and maximising the rent that you're getting from those tenants. You could also look at the existing premises. Perhaps there's rooms that you're not currently getting notional rent reimbursement for that you're now using. You could approach the ICB to seek approval for those rooms, or perhaps you've got some spare space in the premises that isn't being used at the moment that you could perhaps think about bringing a phlebotomist in or a pharmacist in to rent that space out and really maximise the rental income. And then other things to think about are upgrades and improvements. If you're going to modernise the surgery or if you're going to build an extension, as long as you get the necessary approvals from the ICB, that's going to decrease the value of the premises as well. Okay, last bit from me, I promise, about 5 minutes. I'll just talk you very, very quickly through our free premises health check. So some of the things that we offer all practices in the UK is we can check your notional rent assessment. So if you've recently had a CMR6 from the NHS, send it through to us, or if you've got a historic CMR6, send it through to us. We can advise on whether it looks like it's in line with the current market, whether mistakes have been made, whether it's worth further investigation and perhaps an inspection of the premises. We can advise when your next rent review is, whether you're still in within the time frame to instigate an appeal and things. So we can undertake a free notional rent assessment, and as part of that we would check your abatement calculations as well. If you've got access to your abatement calculations, we can have a look at your GP surgery lease if you're in a leasehold premises, so we can check those things like the protection, see if you've got the necessary protections in there. We can have a look at your repair and maintenance obligations, and we can do that free of charge as well. Similar to that if you rent out space to anybody, but if you rent out space to a pharmacy or a phlebotomist, we can check those leases, advise when the next rent reviews are, make sure that the rent is in line with the current market. And then service charges as well. We can have a look at your service charge schedules, make sure you're receiving the services that you're paying for, and make sure you're not overpaying for the services that you are currently receiving. So we can have a look at your service charges as well. And that is it from me. So I will pass you back to Kay. But what I would say as a final thought from me is just make sure whatever you're doing to your premises, whether that be putting a lease in place or thinking about putting a lease in place, looking at your notional rent, or you've been approached by the landlord for a rent review, or you're thinking about selling the surgery, going through a sale and lease back, whatever it may be, just make sure you get the necessary advice. There's so many specialists out there, from from accountancy, obviously Duncan Topless from a specialist primary care accountancy firm, but then you've got a specialist legal firm, specialist listers, specialist surveyors. Just make sure you get the best advice you can. And I'm certainly here to answer any questions or queries you have at the end of this, or if you want to set up a one-on-one chat about anything we've discussed or anything else premises related, just let us know. And that's it. Back over to you if that's okay, Kay.
Brilliant. Thanks ever so much, Will. That was a really informative presentation. I have looked in the Q&A section. I've put our email addresses in there, so if anybody does want to ask us any questions directly, they can do. Can't see any questions in there at the moment, so I will move on to my presentation, and I will just screen share now. There we go. Okay, so I am just going to touch on a few frequently asked questions and issues that impact the accounts where the property is a partnership asset, and I'm also going to touch on a couple of the taxes that will impact partners where there are changes in property ownership as well. So Will has mentioned various scenarios in respect of how a property may be held. So looking at a property that is held as a partnership asset, so an owner-occupied premises, we do see various scenarios in respect of buy-in. So some partners will have personal loans, but more and more we are seeing either practice loans or a mix of practice and personal, trying to look at more favourable interest rates. Some practices will take out practice loans to a level such that they feel buy-in is reasonable for new partners in respect to them sourcing a personal loan for the remainder of the buy-in. And another example commonly seen is in respect to practice loans. So an incoming GP may need to take a higher share of that loan rather than having to inject any cash or take on a personal loan. And perhaps some of the other partners are happy to move some of their loan across to a new GP because they're in a position to effectively be able to pay some of their share off and save on the interest costs that we're now seeing. This is possible, and we have prepared calculations in a number of sets of practice accounts to reflect the different allocations of loans, repayments and interest. Loan interest does qualify for tax relief. Capital repayments don't, which if you think about it does make sense because you don't pay tax on any loan amount you receive, so you're not going to get any relief on that element of the repayment, but it is a question we do get asked. Sometimes not all of the GP partners will own the property, as Will mentioned in his talk. Some new GPs or partners joining a practice don't want to buy into the property. If it is a new GP joining or new partner joining and you've got a partnership where the property is owned by partners within the practice but not all of the partners, then it can still be held as a partnership asset, but with clear reference in the partnership agreement around how property related income and expenditure is shared and clear reference to the responsibilities and liabilities. The property doesn't have to be held in the same ratios as practice profits are shared, and so the same applies. Make sure that this is clear in your partnership agreement, how property profits are shared, and clear agreement, as I say, around property related income and expenditure. It is usually much better to leave the asset as a practice asset, even if not all of the partners are owning a share of the property, because it means the transaction will qualify usually for stamp duty land tax relief under the partnership relieving provision, meaning that there's no stamp duty land tax to pay, which brings me nicely on to taxes. So firstly, for leased properties, where stamp duty land tax is charged on a new lease, then the cost is spread over the life of the lease. So any exiting partners will only take a pro rata share of that cost to the point of leaving, and any incoming partners will take a pro rata share from the date they join until the date that they leave, so that it's a fair cost being spread. In respect of owned properties and partnership changes, where the property is a partnership asset, then providing there is at least one continuing partner and the asset remains a partnership asset for 3 years after the transaction takes place, then an exemption applies and stamp duty land tax isn't payable on the transaction. And I know across the years we've seen practices use non-specialist solicitors who have then been trying to charge stamp duty land tax on transactions that it's not actually due on. So again, it's really important when you're looking for professionals that you're looking for people who do know the sector, because it can be quite costly if you're not doing. Business asset disposal relief. So this used to be known as entrepreneurs relief. If you are eligible, this means that you will pay 14% capital gains tax on all gains on qualifying assets rather than 24% in 25-26, rising to 18% from April 2026. If you're retiring and selling your share of the practice property, then to qualify for business, that's fine. But you do have to qualify it, have been a partner in the practice for at least 2 years prior to the sale and owned a share of the property for at least 2 years prior to the sale as well. There will, of course, also be times you may sell a share to incoming partners, but still retain a share in the property. So, for example, an additional partner joins and buys in, say, there were 4 equal sharing partners and now there are 5. You all sell 5% of your property share to the incoming partner. So for any sale, partial sale of the property, to qualify for business asset disposal relief, then you need to have been a partner in the practice for at least 2 years and owned a share of the property for at least 2 years before the date of sale. And also you do need to be reducing your interest in the partnership by at least 5% share in those assets. So in this example, it is straightforward. If profits are being shared in the same way, you would qualify, but you do have to be very careful if there are other partnership changes going on at the same time as you're selling some of the property. For example, it's not just a case of saying I work 10 sessions a week and I'll reduce to an average of 9.5 sessions a week. If your fellow partners are also dropping sessions too, or anyone else leaves, for example, your overall share of the partnership could be increasing without you doing anything. So you need to just carefully consider the timing and what a disposal of at least 5% will look like. There is also a lifetime limit on qualifying capital gains. So for disposals on or after the 11th of March 2020, this is £1 million. And you need to check the rules of timings because there have been various lifetime limits over the years. So if you've made disposals in earlier years, then it can be quite tricky. So just speak to an accountant. Business asset disposal relief reduces the amount of capital gains tax on disposal of qualifying business assets on or after the 6th of April 2008, as long as you have met the qualifying conditions, which, as I say, are the 2-year qualifying points. Qualifying capital gains for each individuals are subject to that lifetime limit as well. So just be very careful to watch that. As Will has already mentioned, our recommendation is that you seek advice from specialist surveyors like BW Healthcare, specialist accountant like ourselves, and specialist solicitors. It is absolutely essential. As I say, we have got examples of solicitors trying to charge stamp duty land tax on partnership changes several times over the years. So an investment in someone who knows what they are doing can save a lot of money in the long run. Now, these tax rules are very complex. They do interact with each other, especially you've got stamp duty land tax and business asset disposal relief and probably retirements coming into play. So it is vital to get the right advice. And as you know, HMRC are always changing advice as well. So this is right at the time of our webinar. But if anybody does have any specific questions, then please do feel free to email in, because it is essential you get the correct advice and they are very complex rules. So that was my very whistle-stop tour at the end of Will's session there. So I shall stop screen sharing now and just say that I would like to thank Will. Thank you, Will, again for joining us and for such an informative talk. There aren't any questions in the Q&A still, So as I say, if anybody does have any, please do feel free to contact us afterwards. There will be a feedback form coming out at 11:15. So if you could fill that in, it would be really helpful to let us know if you've enjoyed and found this session useful. And also you can note on there if there are any specific sessions you would like to see as running in the future. We have got a financial management session coming up in July. We've got Ash Lane joining us in September, and we'll be having a VAT webinar in October. So those dates will be coming out soon. So please do look out for those. So thank you once again, Will. Enjoy the rest of the day, everybody, and we hope to see you again soon. Thank you.
Thanks, everyone. Thanks, Kay.
Thanks.
Have a great day.